Sachin Shah of Emkay Investment Managers joins us right now on the show with his thoughts. Sachin, good having you. Thanks much for taking the time out. A bit of not a pre-budget rally, but a pre-budget small up move that we're seeing in the markets. You reckon this could last, or will the budget disappoint?
Well, that's always, that's a surprise that we all need to wait for always. But I think at this point in time, if we see the underlying trends are quite mixed. We've got some bit of, like if you look at the automobile monthly volume numbers, it's been almost 6, 7, 8 months now that we've not had any great news from that side. We also continue to have some bit of challenges on the NBFC side. At the same time, we've also seen some bottoms-up themes which are doing fairly decent. And what we've also seen more important is that the valuations on the mid-cap and the small-cap sides now have actually become fairly reasonable after the correction that we've seen for the last 18 months now. So, and of course, some of the other macro data points, like if you look at the 10-year G-Secs, if you look at the oil price, if you look at the inflation, all of this, and of course the most important thing is the political stability that we have now for at least another 5 years. I think all of that really gives us hope that things are going to get much better as we move ahead.
Okay. The high frequency indicators aren't exactly showing some dramatic improvements. Would you guys at MK be staggered buyers into the consumption theme? Because the budget, if anything, might give out whether by tax benefits or transfer of money to poor or otherwise, some dole outs to the consumption space.
Sure, so I understand to some extent what you're saying, but I think the way we look at it is that we would rather look at some secular strong stories. And as I said, that there are some themes, like for example, if we see we are seeing some turnaround kind of momentum happening on the industrial side. We are also seeing some kind of positive signs on the hospitality of the businesses. We are also seeing that some of the large private sector banking, particularly the corporate banks, they are having a very decent demand on the credit side. So their credit, their advances growth will be fairly strong. And obviously because the competitive intensity is not as great as it was maybe 2 years back, the spreads will also get better. So we would rather play and position ourselves on some of those themes at this point in time.
Hi Sachin, good afternoon to you. What do you do with autos now, which is witnessing its worst slump that we've seen in the last 5 years? And of course, we've been seeing the monthly sales numbers don't look encouraging at all. And come next year, you'll have the vehicle prices also moving higher because of BS6 implementation. What should be the right approach now for this space?
See, if you look at it, it's been almost now 7-8 months that the auto numbers have been bad, but more particularly the last 2, 3, 4 months, I think when everybody was expecting that at least in the new financial year things will get better, which hasn't got. But interesting thing is that the auto stocks are not falling now anymore. I mean, they are down 25-30% from the peak levels, but in the last couple of months, when the May monthly numbers came out, or when the June monthly numbers came out, we haven't seen any major sharp fall in the auto stock prices. So the point is that the valuations have actually become very, very reasonable over there. And we all know that auto as a theme is a very, very secular growth story for this country. The penetration levels are still fairly low. The public transport in this country is not to the mark, and that's why personal transportation is a very, very important requirement. So from that perspective, we strongly believe that the auto on a 3 to 5 year basis will actually do very well. Maybe this is a 2, 3, 4 quarter kind of challenges, but the valuations that you're getting today makes a very, very interesting case for investors who are looking to be there for at least 3 to 5 years.
Sachin, the rally that we've seen at least in the last 1 year or say for this calendar year, how much ever Nifty is up by, the rally has been actually polarized. Only 5 to 6 or maybe 7 stocks would have contributed to these gains. And of course, there is a concentration risk among the constituents. I think the top 5 stocks have 40% weightage on Nifty. So going ahead, keeping in mind the macro environment as well, because some measures need to come in order to spur demand. Do you think investors will continue to take refuge to quality stocks?
Well, you're right. If you see the last 18 months now, from January 1st, 2018, we had done some data work on that. For almost 18 months now, within the Nifty, it's only the top 10 stocks which have delivered nearly 18% return. The bottom 40 stocks are down -6%, which is they're contributing -6% to the Nifty. So that's how the Nifty has delivered about 12-13% return in the last 18 months. And this is Nifty. If you go to the mid cap index, the BSE mid cap index is down -15% in the last 18 months. BSE small cap index is down -30% nearly in the last 18 months. So the breadth of the market actually has been very, very subdued for almost 18 months now. But I think the valuations now have become very reasonable, because if you just go back to the valuations in terms of January 2018, the mid cap index was trading at a significant premium to the Nifty, and after this sharp correction in the last 18 months, it's now probably converging into the similar valuations like the Nifty. So from that perspective, I think the price risk is no more there in terms of the frothy valuations, I would say. But mid cap and small caps is always a bottoms up market, and so if one does some more research work, some groundwork level, I'm sure there are enough opportunities to make money there. But of course, one cannot expect things to give you quick returns in the next 2 quarters or so. One will have to take a view of at least probably 2-3 years, and that's where the large part of the return will be made.
Okay, so are you going by the consensus opinion about your quality financials that could lead the run-up and carry on leading the rally that we've been seeing on the index, or there are specific pockets which so far probably the immediate potential doesn't meet the eye, but there are sort of hidden gems which could come about over the near term?
Yeah, so I would like to think that the quality financials, yes, they look all very good and very great. But again, majority of those quality financials are not trading at very attractive valuations. So a large part of their positivity is already in the price. So my sense is that if I take a next 3-year view, I'm not taking next 3 month or a 6-month view, that could still continue with the current momentum that we are seeing over there. But if I take a 2-3 year view, I think there are hidden gems there, and I think probably Nifty might underperform to the mid cap and the small cap over a period of next 2-3 years. That's a very likelihood, the way the Nifty has performed in the last 18 months and the kind of the valuations that we are seeing that has converged now. I think there is a decent opportunity in the mid cap and small cap. It's just that we have to find those gems and do our due diligence well.
All right, Sachin, we'll leave it at that. Thank you so very much for joining us. Really appreciate you taking out the time this afternoon.